Hello, everyone, and welcome to today's Healthcare Property Trust Investor Update. My name is Nicole Sparks, Marketing and Communications Manager at Australian Unity's Wealth and Capital Markets. A reminder that we pre-recorded today's investor update on the afternoon of the 6th of November 2025. Before we begin the presentation, I would like to acknowledge the traditional owners of the lands on which we join you today and pay our respects to elders past and present. A reminder that the information we share with you this morning is general in nature and is not a recommendation to buy or sell units in the trust. We do recommend that you seek professional financial and/or taxation advice before investing in or redeeming from the trust. In today's webinar, you will hear from Vijay Yogavaran, Fund Manager of the Healthcare Property Trust, Chris Smith, General Manager, Healthcare Property, and James O'Keefe, Fund Manager of the Aged Care Property Trust. Firstly, we'll hear from Fund Manager Vijay Yogavaran, who will provide a fund update and talk through the fund strategy and performance. Chris Smith will take us through the direct property portfolio and share an around the grounds on the key developments in the portfolio. With Australia's new Aged Care Act taking effect from 1st of November 2025, James O'Keefe will join to provide an update on the new Aged Care Act and what it means for the aged care portfolio. We will also cover your questions at the conclusion of the presentation. I am now pleased to hand to Vijay Yogavaran. Thanks, Vijay.
Thanks, Nicole. This is my third investor update for HPT, and it's been a very busy quarter for the team, mainly on the leasing front and capital management initiatives. The MSCI chart to June 2025 highlights the recovery across all sectors, including healthcare on a total return basis. Over the quarter, we also saw an uptick in the transaction volume in the market. We have evidenced this in HPT as well. We exchanged Greensboro for $32.5 million during the September quarter and settled this property in October. In relation to valuations, in August 2025, we had a very minimal uplift in valuations for the first time since August 2024. Although the positive impact of valuation is very minimal, it is a good news story as it indicates that we are slowly heading towards a recovery phase. We recently executed a development deed to fund brownfield works at Peninsula Private Hospital, and as part of this, the lease at the property will be extended to August 2060 from August 2050. We have divested around $47.5 million worth of assets and expecting to divest $173 million by end of the calendar year. As a manager, we are really focused on maximizing value for the properties during the sale process, and as a result, we adopt a very patient approach with the divestments. As most of you might know already, HPT owns a wholly owned subtrust called Aged Care Property Trust. We have executed a secured $150 million worth of debt facility at this subtrust level. Given we have secured debt at the subtrust level, we have repaid $102.7 million of debt and have also reduced the facility limit by $75 million at the HPT trust level. Reduction in the facility limit also reduces the line fee that the trust pays. We have made good progress on the leasing front, and I will run through this in detail soon. The total return for the 3 months to 30 September 2025 was a positive return of 0.63%. If we compare this to the 3 months to 30 June 2025, it was a negative 0.3%. Total return for the fund has improved in the September quarter compared to June 2025. Every single leasing deal is critical in ensuring the valuations are maintained or improved, and also it improves the income profile. Some of the leasing deals that we executed during the quarter includes mainly a renewal at Medilink, which is a property located in Townsville, Queensland, for 699 square meters with lease expiry in mid-2029. Terms are also agreed for a 3-year car park lease. A lease executed at Campus Alpha that is located in Robina, Queensland for 111 square meters with expiry in August 2027. We have renewed the medical center tenant at Eureka Medical Center in Victoria for 10 years instead of a 5-year option that the tenant had. Terms are also agreed with the existing tenant at Western Hospital in South Australia to increase their footprint within the property from 134 square meters to 265 square meters. We have also renewed the existing tenant at Ipswich Medical Center, and the tenant occupies a smaller space of 52 square meters. We have also agreed terms with IPA Medical Center for a 5-year lease with a 5-year option at Victoria House, Western Australia. Terms are also agreed for a 10-year renewal with Ramsay at the Eye Centre in Queensland, and we will provide further details soon. Since we started the divestment program to divest properties where the values are maximized, we have sold circa $338 million of assets to date. The notable settlement recently was the divestment of Greensboro for $32.5 million. The net proceeds from the sale was used to repay debt. We are expecting to settle Herbert Street St. Leonard's in November for $56 million. And we have also entered into a sale arrangement to divest RPH for $170 million. And we are awaiting the approval of the Sydney Local Health District for approval. We are currently evaluating other capital management initiatives as well, and we will communicate this with investors in due course. We executed a 2-year, $150 million debt facility for the wholly owned subtrust, Aged Care Property Trust. The drawn debt component from this facility was repaid at the Healthcare Property Trust or the head trust level. This strategy facilitated reduction in total cost of debt for the trust without increasing the leverage. What I would like to highlight are the 3 brownfield and greenfield developments are on track, which are Knoxfield Aged Care Facility, Ballura Private Hospital, and Peninsula Private Hospital. Apart from the leasing activity that I spoke about earlier, we are also in discussion on a number of renewals with our existing tenants. This includes Butterfield Street, Hurston in Queensland, Corio Medical Center in Victoria, which is a 10-year lease proposal. HBT portfolio consists of core real estate assets across a public hospital, private hospitals, medical centers, aged care, with sites strategically located that provides the option to unlock value further. The properties are primarily located in the eastern seaboard where the population growth is. The portfolio is underpinned by occupancy of 95% and weighted average lease expiry of 15 years. The largest tenant for the portfolio is the state government of Queensland across a number of properties the trust owns, including the public hospital that the state operates out of Stars, located in the Hurston Quarter, Queensland. The second largest tenant in the portfolio is the ASX-listed Ramsay Hospitals, and we own a diversified portfolio of assets that is diversified by location and size that is leased to the tenant. The gearing for the portfolio as at 30 September 2025 is 41.6%, with the current bank debt covenant at 55%, and for the medium-term note, the covenant is 50%. Interest cover ratio is tracking at 2.1 times with the bank covenant at 1.75 times and medium-term note at 2 times. The interest cover ratio is expected to improve with the imminent divestments and the hedging that the fund has recently executed. We are currently working on a $150 million refinancing that is maturing next calendar year, and this will further improve the average duration. The current duration for the debt is 2.6 years. We also expect to pay down debt and reduce the facility limit as we sell properties, as this will reduce the debt costs for the trust. As per the PDS, the withdrawal facility is capped at 2.5% of the net asset value for the trust. However, from the May 2025 quarter, the trust has been paying withdrawals at 1.25% of the net asset value in order to facilitate liquidity for the trust. We evaluate the withdrawal facility on a quarterly basis, and we have been divesting assets to facilitate liquidity. However, our focus is also to ensure preservation of unit price with these divestments. During the August quarter, we facilitated circa $24 million of liquidity to investors. Now, I will hand it over to Chris Smith to provide a direct property update.
Thanks, Vijay, and good afternoon, everyone. As noted in slide 7 earlier, direct property returns have reached an inflection point whereby direct property returns are now trending upwards after several years of negative returns. From a hospital operator perspective, I note Healthscope is still to play out, and whilst this is happening, most of the larger operators are waiting to see if they have a chance of buying some of the business locations. In the meantime, we understand the sale of the Aurora Healthcare business is on hold. I don't think much will happen for operators seeking to expand until Q1 2026, after the Healthscope matter is resolved and the Christmas break is over. Of course, one of the key issues in the Healthscope business is the high level of passing rents that was set in 2019 upon the sale and leaseback of 22 of the hospitals. The Trust doesn't own any Healthscope leased hospitals, despite many opportunities to purchase some over the years, and as most recent as 2022 declined to participate. There will be some who benefit and some who don't in the Healthscope business reset. As a result of the New South Wales government taking back the Northern Beaches Hospital in Frenchs Forest, the nearby Wyvern private hospital owned by the Trust should benefit from additional demand for theatre time from surgeons at Northern Beaches wanting to secure their private practices. Wyvern Private Hospital continues to trade up during its first year, and in October its builder Hacer Group New South Wales won the New South Wales Master Builders Award for health buildings up to $100 million. On a broader note, viability for private hospitals appear to be improving, with several of our tenants actively discussing further expansion and with brownfield developments at both Ballura and private hospitals currently underway. On a positive note, the valuations undertaken in August reflected the capitalisation of rental increases for Tuggerah Lakes, Peninsula and Ballura private hospitals, as well as a modest development profit from the Ballura brownfield development. The Herbert Street St Leonard's property is now sold after being on the market for 2 years and settles in mid-November. The write-down in value reflected the sale price of $56 million. The Victoria Parade Collingwood property reflects the shorter lease term remaining for the tenant Sonic, who will vacate at the end of the lease in early 2028. The leasing campaign is well underway for this property. As you can see on this slide, in recent years there has been a close correlation between capitalisation rates and unit price of the Trust. Capitalisation rates appear now to have stabilised and the reduction in unit price has slowed. Pleasingly, during the quarter, the Trust returned to a positive return, and looking forward as rental increases are capitalised, we should see increased property valuations like Tuggerah Lakes, Peninsula and Ballura private hospitals in August. Pleasingly, the new Knoxfield aged care development is nearing practical completion, with a queue of new residents eager to take up residency. All going well, some residents may be able to take up residency before Christmas. As the demand is strong, the operator Infinite Care is already discussing a further stage. This 177-bed facility will provide much-needed aged care accommodation in the southeastern suburbs of Melbourne. The aged care part of the Trust portfolio remains a key focus and provides stable, long-term returns from this subsector. Ballura Private Hospital is one of the original seed assets of the Trust, purchased in 1999. Like most private hospitals, Ballura Private Hospital has continued to grow and evolve its service offering in Mornington on Victoria's Mornington Peninsula. The latest brownfield development will increase surgical capacity with an additional 2 operating theatres, upgrades of 4 existing theatres and associated works. Whilst no new beds are needed, the additional operating theatres will reduce the bed-to-theatre ratio as the hospital pivots from less subacute services to more surgical-related overnight stays. Ballura Private Hospital continues to be a solid performer for the Trust, with an IRR of 12.95% per annum since acquisition in 1999. Peninsula Private Hospital is also leased by Ramsay Health Care on a long-term lease, and that was extended recently to 2060, and it's continued to develop its service offerings since we purchased the hospital in 2006. We're currently undertaking a small $7.5 million brownfield development ahead of a planned $41 million brownfield development. This activity is mainly at the rear of the property. However, we also have a planning approval for another building above the car park at the front of the property. The next $41 million stage will include 4 additional theatres and 24 beds. I'll now hand over to James to provide a direct property update.
Thanks very much, Chris. Australia's population is ageing. In the last 15 years, an average of about 20,000 Australians moved above the age of 80 each year. From 2025, 50,000 Australians will move above 80 each year, more than double the historical average. As people age, they need increasing levels of assistance, including via the provision of healthcare services, at times within an aged care setting. Supply of aged care services, including residential aged care, needs to increase to keep pace with rising demand from an ageing population. The Aged Care Task Force projected that $56 billion worth of capital spending is required to build new and refurbish existing residential aged care homes. Development of residential aged care homes will assist in preventing the capacity within Australia's hospital system from being constrained by patients that could be cared for within a residential aged care setting. For example, in the year to 30 June 2023, across Australia, approximately 439,000 hospital patient days were attributed to patients waiting for a place in residential aged care. Government has responded with several reforms in recent years. During October 2022, the government introduced AN-ACC, or Australian National Aged Care Classification Funding, which matches government funding to the cost of delivering the healthcare that aged care residents need. Government funding for aged care increased 5% per annum for the 5 years ended 30 June 2023. For the year ended 30 June 2024, government expenditure on aged care services was $36.4 billion. A key area of focus of government has been to deliver wage increases to the aged care workforce to assist in attracting and retaining staff as demand increases. From January 2025, the government increased the cap on refundable accommodation deposits from $550,000 to $750,000, noting that these deposits can be used to fund the costs of building more residential aged care homes. It is possible to issue refundable accommodation deposits above this level, subject to approval from the Independent Health and Aged Care Pricing Authority. From 1 November 2025, a new Aged Care Act has been introduced, with key features including: providers must align with a new statement of rights, ensuring care is person-centred and respectful. A basic daily fee of $65 will continue to be payable for the daily living expenses, though residents with greater financial means will be called on to pay a new additional hotelling contribution of up to $22 per day. Subject to means testing, residents will contribute to the cost of non-clinical care subject to a maximum of $105 per day. Clinical care costs for all aged care residents will be covered by the government, including nursing, physiotherapy, podiatry, dietary support, and medication management. There is also a requirement for approved providers to deduct 2% of the refundable accommodation deposit for each year a resident is at a facility, for up to 5 years. This will be a new revenue stream to aged care approved providers that will contribute to profitability of the sector. In recent years, the aged care industry has seen a great deal of interest from the Australian community, plenty of communication and engagement amongst aged care industry participants, and we've also seen much needed government reforms, including the introduction of the new Aged Care Act. We'll continue to monitor the industry closely and look for further ways we can assist by partnering with aged care approved providers in the management and development of aged care property. Thank you, and back to you, Chris.
And here's our development pipeline. As discussed previously for Knoxville, Ballura and Peninsula Private Hospitals, they are progressing well, and in addition to this, we're progressing our development plans for other key sites, including Adelaide in South Australia, Melton and Sunshine, Victoria, Kingswood, New South Wales, and Cleveland in Queensland. In addition, we've partly re-let the former Sunshine Private Hospital, and the redevelopment of the Western Hospital in Adelaide is on track for completion by June 2026. The conversion from a single-tenanted to multi-tenanted building whilst trading is complex. The major part of these works, being the hospital reset, is now materially completed.
Now to answer some of your questions. Thank you to everyone who submitted questions.
Listed REITs have a forward-looking outlook at the share prices, adjust quickly depending on the outlook for valuations. However, when we undertake independent valuations, these are based on recent market evidence. There is always a time lag for the potential buyers to adjust the expected yield in the market. However, given the recent reduction in the interest rates, we are already seeing more buyers in the market, especially private investors and syndicators. The trust continues to fund redemptions, and the outstanding redemption for the August quarter is circa $147 million. It is challenging for me to confirm exactly when we will be able to facilitate full redemptions. The key initiative that is already underway are divestments. We have been using the proceeds from the divestments to fund redemptions on a quarterly basis. Whilst we are focused on facilitating liquidity, we are also evaluating other capital management initiatives. We have briefly touched on this earlier. When interest rates start to fall, it takes a period of time for the buyers to adjust the expected yield, which is what we refer to as the cap rate. However, we can see cap rates starting to stabilize. The tax statements for financial year 2025 have already been sent out. Please contact us if you need a copy of your tax statement. HPT is a contributor to the MSCI Healthcare Index, and on a total return basis, you can see that the index return and HPT is following a similar trend.
The requirement for additional space at private hospitals is very location specific, and it depends on the types of services being offered. As discussed earlier, we are providing additional theatres, however no additional overnight beds at Ballura Private Hospital, whereas up the road at Peninsula Private Hospital, this hospital has a different service offering, and in the next stage we'll add more theatres and also more overnight beds. Contrary to the perceptions that all private hospitals are struggling, this is not always the case in certain locations. Creation of additional space is very much demand driven.
Thank you, Chris, Viji, and James, and all the investors and advisors that will watch this presentation today. Wishing you a great rest of the day.